Hey guys, what's happening? It's Woods. I'm back. Wanted to take time to go over some trading psychology. Just take a moment to discuss about trading psychology and the importance of implementing proper psychology into your trading. Because if you don't have the proper psychology, it's going to affect your probability of becoming a profitable trader, a CPT, consistently profitable trader. Starting out talking about this, you want to understand the fact that the fear, greed, and overconfidence can influence your trading. If you're scared to make a trade, you can miss out on opportunities that can really be opportunities to be able to significantly capitalize on what the market is doing. Now, if you have that greed, then that could affect you when you're in a trade and you're up significantly. That greed can affect you to where you don't close your trade when you should have been closing your trade, and then it goes against you and you end up losing. So you want to be aware of the differences between fear and greed. And then also overconfidence can be an issue when dealing with your trading. When you're overconfident, you're going in saying, oh, I know that price is going to go in my direction. I know price is going to go this way. And that overconfidence, when price goes against you, then the market will humble you quickly. So those are some important things to understand starting off with this. So now, being that this channel is the no FOMO channel, you know what I'm saying, we focus on the fact of having no FOMO, no fear of missing out. When you set rules for yourself, then it allows you to implement that no FOMO mentality. You know what I mean? So if you have no fear of missing out, then you understand that when price comes to you, when you wait for price to come to you, then you have no fear of missing out, because those opportunities are going to come to you in the prime time of them happening. If they do not fall within your window of making them happen, then they're not an optimal setup that you want to take. That would go against you. So therefore, you do not want to fool with those trades. You want to have your A plus setups, your B plus setups, your C setups, and the setups that you do not want to fool with. But those primarily, you want to focus on those trades, those A plus setups. Those setups don't come as often, but when they do come, those are setups that are going to allow you to significantly capitalize. And therefore, if you have the no FOMO mentality and you wait for your kill zones to implement those trades, then that allows you to significantly take advantage of the process. Another thing that I wanted to talk about is cognitive bias. You have to be aware of cognitive bias, because when you have a set idea that you feel is going to take place, you go in feeling that that's going to happen, and when it doesn't happen, then it can throw you off a bit. So if you're aware of your cognitive bias, then you're able to make a split decision and change your direction in a moment's notice. And at this moment, I like to take time to go and hop into the charts and discuss a moment that happened last week where cognitive bias was in play, and I had to be aware of that and make a decision to change up what exactly it is that I'm looking at. So let's hop into the charts right quick.
All right, so what's happening, guys? I wanted to hop on the charts for a moment to discuss how cognitive bias can really mess with us. You know what I'm saying? While we're in the middle of trying to look for trades or let our ideas play out. Now, with this past week, for example, this week I was looking for a nice sell position because we got a break-in structure the previous week, and with this week open. The week opened up, and let me press play on this replay here. And here we opened up with this USD news pushing price down. Now we had this complete breaking structure right here at the week open with this USD news. Now at this point, I'm looking for price to pull back up in here for a sale. So at this point, I start looking for opportunities to possibly buy and scalp my way up to this area here. Now, if you're trying to take advantage of these opportunities, waiting for the bigger opportunity to come, you have to be aware of your bias and be able to switch at a moment's notice if anything changes up. Now, if I go ahead and play this here, you'll see price comes down to the entry point, starts to buy up. At this point, I'm holding, I'm well in profit, and I start to think, okay, well, they could go ahead and make the high for the week and go ahead and sell. This will make perfect sense to me on a Tuesday. Now, if I go ahead and press play here, we come into Asian range going into Wednesday, and then price comes up here and it starts to stall. It can't quite break. So at this point, I let my positions go because it can't break here. Now, you continue to allow price to play, and what we get is an impulsive move down. Now, this here, now, if you kept your bias that it's going to go up and grab this liquidity for the week to go ahead and make a sell, you're going to get stopped out right here. So this is why it's important to keep notice of your biases. You know what I mean? Because if you have a bias that is going to go one way, you could be right, but you could also be wrong. There's always a 50-50 chance that we're wrong. Now, if I let this continue to play out, price reverts, bounces off of support right here, and starts to push back up. But we basically go flat and we end up consolidating within this zone. So that's why it's very important for us to maintain awareness of our biases so that we don't get caught up in our biases and let our biases get the best of us when we could take advantage of scalps here and there. But I just wanted to get on the charts to talk about that real quick.
Now, it's important that you maintain discipline. And maintaining discipline is very important, because if you have your set rules, then it keeps you from making mistakes. Because if you're hopping into trades early outside of your trade window, then it's causing you to constantly make mistakes. This is another reason where this is another time when journaling comes into play. You know what I mean? So journaling is a big part of that trading psychology, because you're constantly reviewing the trades that you make. When you're journaling your trades at the end of your trading session, the next day, at the end of the week, you can go back and review your trades. Look at where you made the mistake, where the issue came into play. And then that allows you to be able to correct yourself and see, okay, well, at this time window, these things weren't working for me. And at this time window, these things worked for me. At this time window, this is when I'm the most profitable. At this time window is when I'm most likely to lose. So understanding and maintaining that discipline can make a difference in your trading decisions and help with that trading psychology. Just make sure that you're aware of that. Now, we want to talk about developing a trading mindset. Now, talking about that mindset, we want to develop a healthy trading mindset, which involves being patient, resilient, and adaptable. And so you want to be able to adapt in any situation. So if price is shifting and you see that happening within order flow, within the candles that are being made, then you want to adapt to the situation to be able to switch direction as prices is switching direction. Now, one of the things that I like to keep in mind is that I don't like to consider myself a trader. We're professional risk managers. So it's important to keep your emotions in check, and especially in periods when you're in drawdown, because those are periods when you might have to make a decision to lower your risk. Now, in normal circumstances, your typical risk might be 1.5%, maybe even 2%. But when you're in periods of drawdown, then you drop your risk down half. So you may drop down to 1% or 0.5% to build it back up. Because when you understand the importance of that risk management, then it helps you to keep from taking chances of higher probability of blowing the account or getting yourself in a predicament of losing the funded account. So you want to avoid those type of situations by understanding, keeping your emotions in check, and understanding that you are a professional risk manager. Always keep risk in mind. Don't focus on the profit, you focus on the risk. Focus on the risk first. Profit is an afterthought. It's an afterthought. So in conclusion, I just wanted to point out that things we discuss are issues about psychological challenges, being aware of those, keeping your emotions in check in your trading, and maintaining focus on discipline and the importance of your trading mindset. You're not a trader. You're a professional risk manager. So yeah, that's all I got for today, guys. So I just wanted to stop in and drop a few lines on my views on trading psychology, because it's important to be aware of those things, because that helps us to maintain a healthy trade life balance. All right, so that's what's up, man. No fumbles.